Good morning and welcome to another edition of Wilson's Weekly here on the Money Mentor podcast. I'm Alex Hyndman-Hill and I am joined by Dr. Andrew Wilson. Dr. Wilson, good to see you this morning.
Yeah, good to see you, Alex, and happy June, happy winter. Is that an oxymoron when we say happy winter? But no, I think we like some of us like the cooler months going forward.
Yeah,
it's interesting.
I don't mind. I can get into my wardrobe and get out some of the things I haven't worn for a while, you know.
Well, I'll give you a tip. I'm into beanie, puffer jacket, and gloves and scarf mode at the moment down here in Melbourne because it's very cold.
No. I can't say the same up here. We're still in short sleeves. It's still nice and sunny, but it is around 20 degrees, which is cold for Queensland.
Well, it's around about 5 degrees down here, and with a chilly wind, with the wind chill factor. But look, as you say,
it's sunny vibes and hopefully sunny outlook for the housing market this week.
Well, we've got plenty of good news on that in terms of our latest price data, but it is June now, so we'll have a few more weeks in terms of an active housing market. Of course, the autumn selling season, in inverted commas, runs all the way through really to about the end of June, and then we hit the midwinter market, and everything is on pause mode until we resume middle of August, end of August for the spring selling season. So, gee whiz, we're already talking about the spring selling season here. It means really as we know, in terms of the calendar year, the first half of the year is almost done. But the first real energised part of the housing market is finished as well. And we've had a bit of a mixed environment, of course, because we had a later Easter this year. Easter worked its way right into Anzac Day. And then, of course, we had Federal Election Day as well. So April was a bit of a write-off in terms of focus on things like buying and selling. But we're into May, we've gone through May. And so the market's really fully focused now, Alex, so we can have no excuses going forward. And it'll continue that way for the next couple of weeks. Although, of course, in most states we do have, and it's hard to put it into words because I'm still used to saying the Queen's birthday long weekend, but it is the King's birthday long weekend.
Yeah, I always get confused now. It seems very surreal, but King's birthday.
So that's coming up, and we had a big weekend or a big week of auctions last week because, of course, vendors, agents are trying to avoid another holiday distraction the coming weekend. So we'll have a look as usual to those latest results from last week, and again they were very positive for sellers in the marketplace. But yes, look into the guess nearly into the second half of the year now, so we can really, of course, and we've known for a month or two, understand how markets are travelling, and of course we've had the benefit this first half of the year of 2 interest rate cuts, which are always a positive for the housing market. We probably haven't got the energy from the second rate cut yet into the markets, but that will be coming along. But certainly that first cut in February has helped markets move along. And we will look at the latest results for May in terms of house prices and unit prices.
Yeah,
so hot off the
press.
And we'll have a quick look at retail sales, the latest retail sales data, which gives us a bit of an indication of how consumers are feeling. So without too much more ado from me, let's have a look at the week that was over the first week of June of the year, ending Wednesday, June the 4th. It seems just really bizarre to be talking about June at the moment, but that's the way it goes. So, well, again, welcome to June. Courtesy of My Housing Market and the good folks at Infinity, we bring you the weekly update in the housing market, not just the prices and rents and auction results, but also, of course, all those supplementary and contributing factors that make up the drivers of the housing market. And, of course, we're all about the current state and future prospects of housing markets at My Housing Market. And it's not just commentary. We also provide in-house data, prices, rents, auction results as well. So you get the whole deal here. And it's about, giving you the most information or the most accurate and up-to-date information on the housing market as you make that very big decision in your life, or if you're just curious to know what's going on. As we mentioned, it's the week ending Wednesday, the 4th of June. Year has flown by.
I know, we'll get used to saying the date soon.
Yeah, we will. And this week, straight hot off the press, the latest home prices, the May home price report, both units and houses, the April retail sales, and as usual, the latest weekly auction results. So let's have a look at those latest home prices, Alex, to see what's been happening. So no surprise, May home prices have increased again. Of course, we've had those 2 interest rate cuts, as we discussed before. The second one probably hasn't really worked its way into affordability improvements yet, but certainly would have added to confidence from the marketplace, and that would have been part of what's driven the latest rise in home prices. But of course, the February cut, which was the first cut for a few years, has certainly had an impact on what's happening in the housing market. And certainly most of our capital cities have reported generally positive results over the May quarter compared to the previous April quarter. Of course, we take 3 monthly snapshots of the market in terms of sales for both houses and units, and we compare that to the previous month's three-month period. So it's quarter to quarter from month to month. So we get plenty of data to make it reliable, and we get to see the trend from month to month. So we get to understand what's generally happening in the market in terms of trend. So 3 months in a row now with higher national house prices. The national house price is a weighted average. It's based on the activity levels of each of the capital cities. So obviously the bigger capital cities contribute more to the weighted average national house price, Sydney, Melbourne and Brisbane. But nonetheless, we can see there that clear trend. Of course, normally we get some seasonal effects earlier in the year as a result of holiday distractions and the back to work period. That's why we typically see a bounce back in March, but it's been very consistent this year, March, April and May. And as you can see there, 3 consecutive quarters of house price growth in the national numbers.
Does that look like it's going up for the next few months in your crystal ball? Is it going to record highs or?
Well, we're at record highs now, Alex, and I would suggest that you'd have to be a little heroic to say it won't continue through to the end of the year. We have all the positives of a strong economy, lower interest rates, rising confidence. So, there's nothing there really other than fear itself to stop the market rising. And, buyers will be particularly anxious to get on board, I guess, particularly in that Melbourne market, which is on the rise now at last, to avoid higher prices. It's gone from phobia, which is fear of being involved in the Melbourne market, to FOMO, fear of missing out on the Melbourne market. Yeah. So that energy should drive higher prices in Melbourne particularly, but also the other markets are up and about again. Even the markets that were looking a little softer, such as the Perth market, which has had a spectacular rise over the past couple of years, and Adelaide have picked up just when they probably needed it in terms of the outlook for sellers. They've picked up on those lower interest rates and prices are rising again. So let's have a look at the data. Over the month, all the capital cities reported higher house prices over the month. Top performer there was Canberra, which we've been waiting for a revival in that Canberra market for a while. We need to see a few more months of activity before we call a rising Canberra market, underlying rising Canberra market, but up by 2.3%. Hobart up by 1.1%. That Hobart market has certainly lifted over the past year, starting to improve now. Melbourne, we mentioned Melbourne in revival mode, up by 0.9%. That's the second quarter in a row that it's increased by 0.9%. And now, for the first time in some time, the Melbourne market is higher now than where it was a year.
Yeah, it's really picking up there, isn't it? It's interesting to see all of those 2-year highs as well. The amount that they've risen in the past couple of years. It's just it's astonishing to see it all kind of flowing in that upward direction without any kind of sign of going back to where it was before.
Yeah, look, Alex, one of the interesting things when we're looking at those individual markets is the Perth market. And of course, the Perth market just really took off over the last couple of years. Its price growth was starting to push towards 50% over the 2-year period. It's tracked back a little bit because it's softened over the end of last year and into this year. But again, Perth starting to revive, and I think it's that lower interest rate energy that's reversed the Perth market. Of course, it's a very strong economy in Perth. It has the highest incomes in the land. So other than confidence and the market cycle just getting a little bit out of puff as things happen after 2 years of spectacular growth, was into pause mode. But as I said, now with lower interest rates, it's bringing more buyers back into the market. And Perth was up a reasonable 0.6% over the month. That's the 3 monthly period to May compared to April. And this year now it's up. You can see the big difference. It's up by just 0.2% this year so far, which is actually the worst performance of all the capital cities. Can you believe we're saying that about Perth over the year to date? So that's the first 5 months of this year. But as I said, Melbourne up 0.1% over the year. First time in a while the Melbourne market's been positive over the annual period. But again, Brisbane, Adelaide and Perth still up, by significant amounts, near double figure amounts over the past year. Brisbane up 8.2%. Adelaide up 10.3% and Perth still up 11.2% over the past year. So look, pretty positive results there across the board. And as I said, the underperformers remain Canberra and Melbourne, and some really positive signs for both those markets. Maybe still a little premature for Canberra, but I think we can well and truly say that the Melbourne market is on the rise. And look, we've been saying that, Alex, anyway over the last month or so, because those Melbourne auction clearance rates, weekly clearance rates, have been, if not the highest of all the capital cities, but close to the highest and well ahead of where they were a year ago. And and we'll look at that closely, what happened last week in a minute. But as we've said, auction clearance rates are a great forward indicator of what's happening generally in the marketplace. That's why we look at them every week. And again, they've proved to be a very reliable indicator in terms of that Melbourne market. So that was the result for houses going forward. Let's have a look at units. 4 months in a row now of increased unit prices, growing stronger than houses at the moment, but certainly a big pickup in the unit market. 4 monthly quarters in a row on the rise. National prices up by 0.6%, unit prices over the May quarter compared to the April quarter. All capitals, with the exception of Canberra, recorded positive growth over the month for unit prices. And Canberra's certainly been an underperformer for the unit market over the past year compared to the other capital cities. Now, we've been talking Perth down, but not for units. Perth were up by 1.2% over the month. This year so far, up 4.6%. So Perth units are really outperforming houses. It's a smaller unit market, but nonetheless, there are enough sales there to say, well, this is a reasonably consistent result. Up by 4.6% this year so far.
That's what I was going to ask. Are there more being built there, or is it just...
Well, we've actually seen, Alex, and we discuss building approvals, and we'll look at building approvals for April next week, something to look forward to. But Perth has had a boom in apartments over the last 2 years and houses, and that's been really a reflection of so much demand in that market that supply has not been able to keep up. So there's plenty of incentive for builders to get in and build more because there's plenty of buyers around looking for stock. So that's part of the story, and 14.7% increase in Perth units over the past year. Melbourne up 0.5%, not quite as strong as houses, but still up 0.5%. And Melbourne units are still down by 1.1% over the year, but better signs there for Melbourne units. And I'd suggest that continues to reflect that Melbourne market as an opportunist market for units particularly. And look, again, we should point out that Brisbane market, it's just, continues to be very strong for units, up by 0.5% over the month, 6.4% over the first 5 months of this year. Brisbane unit prices higher. And over the past year, Brisbane unit prices up by 15.6%. And Alex, look at that 2 yearly growth in
I know,
Brisbane
that's
units.
insane. What is that? Just more people wanting to live in the city, more people kind of
Yes,
maybe kind of post-COVID, they're not so concerned about living close to everyone else. The proximity kind of that pushed everyone out of the cities back in COVID is maybe kind of wearing off.
absolutely, Alex. 100% that Brisbane is really embracing inner city unit lifestyle. It's been going on for some time, but of course it's accelerating now. I think Brisbaneites have discovered, particularly younger Brisbaneites have discovered inner city living. If you know Brisbane, I'm sure you do, Alex. Well, it's created a marvelous inner city environment. It's very livable in terms of higher density living. A lot of new infrastructure there. Commercial infrastructure, recreational
all leading into the Olympics as well. There's a lot planned as well.
Exactly. And the demand just can't, or supply can't keep up with demand for units in Brisbane, particularly inner city Brisbane. And the council have been struggling really to try to match that demand, and provide development sites for builders for units. But that's just spectacular growth. And the interesting thing is, it's not that long ago where there was plenty of talk about the Brisbane inner city area being saturated with units, that prices would collapse and there were too many units being built, etc., etc. Now look at this. There's just this supply drought. And of course, as you said, it's matched with this growing interest in Brisbane for inner city, higher density living. And all kudos to Brisbane, because it's not just a matter of building the high rise. You've got to also provide the infrastructure there. And I think that's matched its development. And that's why it's still a very strong market, that Brisbane market. And I still think plenty of upside in terms of the social change of people, in Brisbane looking for a different sort of lifestyle to the traditional sort of Queenslander environment that Brisbane had. And, as I said, this something's been developing for a while, but I think it's accelerating now. So, yeah, Brisbane up 47% over 2 years, the value of units. And, again, quite positive results there, just about everywhere except for Canberra for the unit market. Hobart has the strongest performance over the past year, up by 20.3%. But that is a very small unit market, Alex, and that tends to be quite volatile from period to period. That's because you can get a period where there were more higher priced sales compared to the previous period. So that tends to bump up the medians, and that then translates into a higher result in terms of growth from period to period. But nonetheless, generally the Hobart market has been starting to show clear signs of picking up over the past 6 to 9 months. So if you missed out on you won't miss out on the latest house and unit price report from My Housing Market. We've got a QR code up there on the screen. If you scan that QR code, it will give you a PDF link to the report, and which has got not just the data we've seen there, but also commentary regarding the whys and wherefores for the May housing market report. So, as we mentioned, we'll also have a quick look at April retail sales. It's important to look at retail sales because we want to know how the consumer's thinking beyond purchases of property. And retail sales are a good indication of the mindset of consumers out there. It's been interesting because a lot of consumer sentiment surveys, which are called soft insights or soft data, tend to be quite negative. And I think it's people, tend to say, when they ask the question, are things going well? They tend to say, no, they're terrible. And yet they've just gone out and bought a house. So it sort of reflects what they perhaps think the interviewer wants them to say, or perhaps that Australians are never satisfied. And that's a good thing, I think. But the retail sales are not a soft data set. They're a hard data set, and that means they're sort of actual.
The actuals, yeah. Let's look at the actuals then.
Well, we've had some very strong months leading up to April, so no surprise that we were reasonably flat over April, down by just 1%, 0.1% over the month, that is, compared to March. But we're still up quite strongly, 3.8% over the year. The increase follows a 0.3% rise over March. And despite, of course, we would expect, and this is the value of retail sales to be higher given inflation, because it's the value of retail sales. So as prices rise, inflation rises, of course, the value will rise. And of course, we've got more people coming in terms of migration flows. So despite that, we're still plenty of positives in terms of consumerism and retail sales, and we're still well ahead of where we were in the COVID period. So lower interest rates, of course, it will help retail spending because it puts more money in our pockets, and guess what? We'll go out and spend it. And of course, as I said, it actually reflects positive consumer sentiment because we're out there buying. So there's the trend going forward on the monthly basis. You can see they're still rising quite solidly and still well above where it was a year ago, 3.8% higher. And that's the monthly growth rate. So really, they've been quite strong, the annual growth rates over this year so far. So that's comparing where we were to a year ago. So it clearly shows a very positive mindset from the Australian consumer reflected in positive retail sales. So we know that anyway because housing markets have been on the rise as well. So people are quite happy to go out and spend. So we can quickly look at the latest weekly auction results. Alex, as we said, a good forward indicator of where the market's tracking, the underlying nature of the market. Of course, we had the final week of autumn last week. Still strong results, higher clearance rates again for most capitals, despite a big surge in listings. And as we discussed before, Alex, we had that big surge in listings because we've got the King's birthday weekend coming up in most states this week, this coming weekend. So that's tended to drag down the number of listings. And of course, it's dragged down because agents and vendors want to avoid the distractions of that weekend holiday. But even regardless of that, we would still expect to see some positive results this week again in our auction market. So this is the data. Big rise in auctions in Sydney, up from 754 to 1,008. Clearance rates about the same. Good strong result there for Sydney clearance rates. It means that 3/4 of the properties that are listed are selling under the hammer, and that's always a good result for sellers and means typically higher prices going forward. And when we look at the clearance rate from last year, Sydney continuing to track higher than last year, similar to higher than last year. Again, a big result for Melbourne, 1,400 auctions in Melbourne. Clearance rate down a little bit, but gee whiz, given an extra 300 auctions, you'd expect some sort of an easing in the clearance rate, but it was only marginal. But the big story there for Melbourne is just how far ahead it is of where it was at the same time last year in terms of the clearance rate. And that's, again, reflecting the story that we've already discussed, that Melbourne market is certainly looking a little brighter this year in terms of higher prices. And, of course, that's from the seller's perspective than it has for quite some time. Brisbane a little higher as well. Numbers of auctions down a little bit, but we know that auction clearance rate in Brisbane tends to, in normal circumstances, track in the mid to high 40s because it has a different auction culture compared to Sydney, Melbourne, Adelaide and Canberra. Adelaide's been another changed market over the past year, not for the positive in terms of Melbourne compared to Melbourne, but for the negative. Adelaide's well below where it was a year ago when it was Australia's strongest housing market, certainly Australia's strongest auction market, capital city auction market. Still a positive result there and a little higher than the week before. Lower interest rates helping that Adelaide market to revive, but well below those record levels for that market that were recorded a year ago. And hey, a good result there for Canberra again. We've seen some early signs, perhaps some green shoots for that Canberra market going forward with some recent data on house prices. We'll need to see a few more results, but maybe there's another sign there with that 66% clearance rate that the Canberra market is starting to think about a revival on the back of lower interest rates. Here's the Sydney trend, monthly trend going back a year, around about where it was a year ago, but certainly higher than where it was to end last year. So more positive news for the Sydney market. Look at Melbourne, crazy stuff. It's really had a very strong start to this year. That's the highest monthly clearance rate we've had in Melbourne for a couple of years now. So, good, strong result there for Melbourne and validating what we're seeing on house prices. And I would expect that momentum to continue forward into the outlook, as I said, particularly given more energy from lower interest rates. Brisbane down from a very strong performance in relative terms a year ago in its auction market, but more of a normal environment for Brisbane auctions, and one that would still be producing higher prices in the market. Adelaide lower than a year ago. We discussed that. But again, it will benefit from lower interest rates and maybe just some signs that Canberra is starting to think about a long-awaited revival. But we need a few more weeks to see that, whether that becomes consolidated. If you're looking to see the latest auction results, you can get them on my LinkedIn channel, Doc Andrew Wilson at LinkedIn. Every Saturday at around 6 o'clock, we get lots of views on that. And if you're looking for the full national report, that's released on Sundays, usually around about 9 o'clock, and that gives you the regional breakdowns for Melbourne and Sydney, as well as the top 10 sales under the hammer for each of the capitals over the week. So get onto that one. If you've missed the latest weekly auction market report, you can get a PDF copy of that by scanning that QR code. So just quickly, here's our lovely giveaway. Good folks at Infinity provide you with the My Housing Market Suburb Data app, which gives you insights into the suburbs of the data for every suburb in Australia that has data. So if you want to know what's happening in the suburb, get a hold of this app and it will tell you. We get lots of views on this app, which is great. If you're looking for that, there is a scan again for you to get a link to the app. But just an update, you have to get the password from the good folks at Infinity to access that app, but it's surely worth getting hold of. Alex, as you keep telling
hold of it. Yes, it is worth getting hold of, though. Yes, so Infinity clients can grab that password and have a little look at all that data, which is invaluable stuff.
Yeah,
Thank you so much, Doc.
Where do you get this? Anywhere else? And it's real-time data, so it's constantly updated. And it gives you an insight into how the market's thinking about each suburb. So we talk about capital cities and regions here. People say, yeah, okay, that's good, because we want to see the big picture. But the little picture is what's happening in my suburb. You want to see the street,
yeah. What's going on in my street? What's happening around the corner? Yeah.
and we can do that with this app. And here's a screenshot. You can actually look for prices or rents. You can filter it for the capital city of each region of each state, or the outside capital city region of each state. Then, of course, the suburb. We've been looking at Blacktown here. You can filter it for the type of property, house unit or townhouse. You can also filter for the number of beds. So you can really drill down into specifics here in terms of what's happening in the market. So these are asking prices. So this is what the market is currently asking for suburbs. So it's not just the median asking price. So it's what it's what sellers think that the market will offer them in terms of a price. So it's not just the median; it's also the low and the high being asked at the moment. So you get the barriers here. So you know the middle, you know the high, and you know the low. It also tells you the number of properties for sale as well at the moment. So great thing there. And you get exactly the same thing for the rental market. So if you're a tenant or a landlord, there's some good insights there. Or you want to know the potential returns for an investment property. That will assist you in making those evaluations, and it also tells you the number of properties for rent at the moment with the same sort of filters that you get for
it's
prices.
Also fun just for a little sticky beak.
It is actually. And if you're thinking of, hey, I'm thinking of moving, or what's the next suburb worth? It's not just your suburb, right, to get you an idea of what you might get for your price, but it's also, well, where can I go? Where can I afford? If I'm looking for, and it's not just generally, it's like, well, I probably need a 4-bedroom home, or I only need a 2-bedroom home, or I need a unit, or I need, perhaps a townhouse. You can look at all those variables going forward with that. Yeah, so get hold of that, get the password. And if you're an investor, you can also, which we've got a little bit of an add-on now to the app, we also give you on a suburb by suburb basis on those capital city and outside capital city regions, the top 10 yields. So these are gross yields, which is the return from the annualized asking rents to the current asking prices. So this gives you a sense of what sort of return you will get. It's a gross yield, of course. It's not a net yield, so you need to take costs out of it. But it's a really good forward indicator, a really good indicator of the returns on a suburb by suburb basis, and not just the yield, but also the vacancy rate for each of these suburbs, and the rents, the number of properties for rent, and the number of properties for sale. So it gives you that opportunity to sort of take a scientific approach to your evaluations of particular investment opportunities on a suburb by suburb basis. And of course, then you can look at the prices and the rents for each of those suburbs. So look, this app has all the data you need to make those, positive decisions, or to make an informed decision on your property purchases or your property sales going forward. All right, so next week we're going to have a look at, speaking of rents, the latest home rents from May. As I also mentioned earlier, the latest home building approvals, and as usual, the latest weekly auction results. If you've missed this week's report, there is a QR code if you're looking for the data out of it. Again, you can scan that to get a PDF copy. And that's all for us this week, Alex. Again, the first week of June.
That's it.
We'll be, even though it's a long weekend in some states next weekend, we'll be back here, bigger than Texas, if I could say that, or bigger than Queensland next week with all
maybe
the
more
latest
expensive
data.
than Queensland, yeah.
Yeah, that's right. But it's been a big week again in property. And look, it's been a very positive year so far. And it's not just, that we've continued to see prices growth. This will clearly be, unless something really untoward happens, which never really does happen in housing market activity.
Touch wood. Yep.
Well, it'll be 3 years in a row now with positive prices growth. And we're certainly on track now to match what we did last year. And the previous 2 years have sort of been rebound years. This is a consolidation year in a sense, but of course it's coming off the back of lower interest rates, which are always a positive for prices growth. And of course, again, it starts, once the confidence really starts to get higher, it creates that fear of missing out energy in markets, because buyers are then motivated, hey, if I don't buy this week, I'm going to have to pay more next week.
Yeah, I'm going to miss out. You don't want to miss out.
And with our building approvals data, which we'll look at next week, we'll continue likely to validate the fact that we just don't have enough houses to go around. So it's not as though we've got more stock coming in. We don't. And it's just continuing to drive higher prices. So I hope you have a good week, Alex. All right.
Thank you so much. I hope you do too. Enjoy your long weekend. And
I don't think you get it up there, do you? I don't think you get.
I don't know. It's in my diary, so I'm definitely having it.
Yeah, we'll have it anyway. What the heck? Good luck with that.
It's fine. I'll have to celebrate the king. All right. Enjoy your week. Thank you so much for joining us here on Wilson's Weekly on the Money Mentor podcast.
See ya.